Hello and welcome to another video. I'm Adi from Pixel Profits and this is video 8 in my market structure series. This one is going to be about flip zones. So while I was planning this video out, I was marking up my chart as I normally do, and I noticed this potential trade setup that you can see on the screen here. I'll talk about it in a second and then I'll show you how I formed the idea with the basis of it being a flip zone. Then in the rest of the video we'll go over what a flip zone is, how to use them, and how they can be a great confluence to your trading. Now, I was too much involved in making this video at the time I saw this setup potentially forming, so I didn't take it and I'd actually closed down the charts, because I have a saying that if you're not focused on business, then you have no business trading. So I decided to stay out of the market on that day, and I was making a video about flip zones for you guys. So I hope you'll find value in this. If you do, let me know in the comments below. I reply and read all of them, of course, and they are very much appreciated, and it helps me know what you guys want to see next. Okay, so let's get started with this example first. So up in the top left, well, first off, you can see the price. We're going from left to right and then down. Okay, so you can see the price is up in this zone, and I've drawn this red box as my flip zone. Just going to give you an overview now, and then I'll go into a bit more detail. So you can see the way price came out of the red zone. It fell more, and then eventually it fell down to where I've got this blue arrow. Let's talk about what it all is. All right, so starting in the top left here then, you can see on the left here I have the 4-hour chart. Sorry about the mess up there. I forgot to hide these drawings I'd done on the 4-hour. But what you can see is that we've been coming up. We dropped back down. This was actually a trade I posted a video about as well, that I did actually take. We dropped down into this gap, and then we went and we took external liquidity. So I'm expecting there's a possibility that we're going to be coming back to internal liquidity next. Now, what you'll also notice is that we broke structure here of these highs on the 4-hour chart. So there's another reason that after an expansion, we expect a pullback, right? So there's another reason for price to come back down into this area. We have a 4-hour change in the state of delivery and a 4-hour fair value gap. If you don't know what I'm talking about here with any of this stuff, go and watch the rest of the videos. You'll find everything you need right there. So my idea then is already that price may come back down and revisit this area where I've drawn my blue arrow, and then it might continue to the upside. So going over to the 15-minute chart here then, we could see that I've marked out 15-minute structure and my internal structure using my order blocks and so on. And what I noted is this flip zone is formed here. I'm not going to explain what that is yet because we need to do that in the rest of the video, but just take my word for now that this is a flip zone. Okay? What I'm expecting is price is going to come out of it, go back into it, and then fall. So where am I expecting it to fall to? You can see my blue arrow down here. Let's see what happened. So the next screenshot I took, because I realized that this was happening as I was doing the video, and so I thought, oh, I better screenshot this because I can use it in the video. It's funny how they just appear as soon as you make a video about them. But anyway, price comes back, and you can see the arrows I drew predicting or anticipating where price might go, I should say. I drew these obviously not in hindsight, before price had happened. So you can see that I was fairly accurate. I thought price would come back up into this 15-minute inverted fair value gap and changing the state of delivery here, which you can see on this wick here, it touched perfectly and rejected heavily from. Exactly what I was looking for from this flip zone as well. Let's move down. You can see price continued to fall straight down, no resistance at all, and then it came into my zone, a quick tap, a quick bounce back out into what was probably now an inverted fair value gap, and then we come down and look where we hit. We hit exactly on the 4-hour change in the state of delivery, which also has a 15-minute change in state of delivery from the left side of the chart. This is within a 4-hour fair value gap and within a 15-minute fair value gap. So you can see why I drew my blue arrow there as an area of confluence way before any of this had happened, because this is exactly what I expected. And you can see up here on the 4-hour chart, you can see how it just tagged in there perfectly, and then off it went to the upside again. So you can see the sort of precision you can get using the stuff that we've talked about so far, but also this flip zone. So let's now go on to some examples, and I'm going to show you how to identify these, what they are, what they mean, and then I'm going to give you some more examples of how to use them. Okay guys, here we are on TradingView. Let's start on the left side of the screen here, where we're going to look at a standard reversal pattern, sequence, formation, whatever you want to call it. We've covered this in video 2 and 3, I believe, so go back if you don't understand this. But if you do, let's just quickly talk through it again, because you need to understand the difference between these two sequences and how to identify a flip zone. Okay, so in a normal reversal sequence, what happens is we've got a series of higher highs and higher lows, and we're moving up, and then we come back down, and this previous pullback that was formed, which I've drawn the rectangle round, right, around the pullback, this previous pullback is an area, in theory, of demand. Okay, people are willing to buy here and push the price higher. But now we just get pure supply, and that supply is so strong, or demand is so weak, you could say, whichever way around you look at it, the price just smashes straight through this previous zone. There's no resistance at all, really, just smashes straight through. And then we come up for one more attempt to make a new high, which we fail, and then we go down. And these are our points of failure here, right? Failure of this low to hold as a strong low, because that would have been a strong low, and then the failure of this low to make a new high. So there's our 2 points of failure. Okay, we talked about that in video 2. Now, let's take a look at the flip zone then. So in a flip zone, we have the same higher highs and higher lows forming, and we come up, but this time when we come down, instead of smashing straight through like we did over here, we come back into the previous area of demand, and there's enough demand left there that it pushes price higher. And what we think is that price is now going to continue in the uptrend as we expect. But what actually happens instead is we come down, we bounce from the demand, and we appear to be going up, but then we fail here to make a new high, and then we break through with a break of structure. Okay, so it's this now area here, this pullback here, that's responsible for breaking through this structure. Okay, so here we went straight through, here we got a bounce, and then we went through. The important part is that we got a reaction here. We got some kind of bounce, a reaction to this demand. So the supply has been strong enough that even though there was some demand here, it still managed to overpower it in the end. And the area, or the zone responsible, the pullback responsible for breaking through this structure, becomes our flip zone. And then what we expect is once we've come down out of the flip zone and broken structure, that confirms our flip zone, and then we expect a retest of the zone and then the move down. Okay, so rather than smashing straight through, we come down, we bounce off, and then we smash through, and then we come back up one more time to revisit the area, and then we go down. You can see I've used these rectangles, and you can do the same if you like. This makes sense to you to mark out these pullbacks here. Okay, so what I usually think about is it goes down to go up, or it goes up to go down. Now, another thing I ask myself when I'm looking at these type of zones is, what did it take? What did it break? Okay, and in this case, price took, in the end, the zone here and caused a break of structure, but not before it got a reaction. So it didn't manage to take this high, so it failed to do that, and then it managed to break the low. What did it take? What did it break? So some people might see this as some kind of fake out, right? It appears to be pushing higher as we expect in an uptrend, but then it fails and drops down. And yeah, I mean, absolutely. You know, it's all the same stuff. I keep saying this in all my videos. It's all the same stuff. Whatever way you want to call this or see this, or which way it makes sense to you, that's fine. But I'm just giving it these labels and these names and stuff just so we can have some kind of context and some kind of understanding amongst us of how this works. Now, of course, these appear on every time frame, on all assets, and you can combine these with other points of interest, which we're going to do in a moment on the chart, to look for areas inside here where the price might revisit and then drop. And of course, a bullish example is just this upside down, right? You flip the whole thing over. We're going to go through some of those as well. So let's go on to the chart now and take a look at some real examples that I mapped out. Okay guys, here we are on the chart and let's have a look at some real examples. So here we can see that on the 5-minute gold chart we were in a big uptrend going up and up, and we're creating all these zones going up, or these pullback zones, okay? Pullback, expansion, etc. Over here, these numbers and these lines here, this is actually my candle range theory video that I made previously, and I wanted to leave this on here because I wanted to show you that there's a flip zone within this, but also there's multiple ways you can trade certain areas of the chart, okay? Whether you look at it through the lens of candle range theory and AMD, or if you're looking at it through the range of flip zones, or whatever it is you're looking at it through, doesn't really matter. You can formulate trades all over the place based on all kinds of different concepts. You just got to choose the ones that work for you. So let's see if flip zones work for you. Okay, so price is coming up in an uptrend. We get this last pullback and a break of structure. That creates a zone, if you like, from the where the price got broken and from the low. Okay, we just draw a down to go up. Okay, that's our zone. So when price breaks out of here, we expect a pullback again, maybe back into this zone here, right? But not always. But in this case, we do want that because that's going to form part of our flip zone. So we get a pullback into the zone, and then we come back up and we fail to make a new high. And this now zone that we've drawn here, so this one was down to go up, this one is now up to go down. So if we draw our potential flip zone here, once we get price coming down and breaking through the low here, what would previously have been our strong structure, we break through it and we actually come back up immediately and revisit the flip zone, and then we get rejected down. Now, we also come back up here, back into the flip zone, and back in now to this 5-minute fair value gap. So if you'd taken a trade on this first retest of the zone, you may have got stopped out, because what happened is price came down, but then it went up for one more test, and you can see that there. Let me just zoom in a little bit more. It swept liquidity of the previous retest and then came down. So if you've taken the first change in state of delivery, you might have got stopped out, but that's fine. We can take the second one, and let me draw that on for you just to show you. From the change in state of delivery somewhere down here, we could cover the high, and then we could target whatever you want. But if we're expecting this to be a flip zone and push price lower, well, I mean, you know, whatever, target what you like. Eventually price went all the way down there. I don't want to draw that out because you probably wouldn't have taken that whole move, but you can see here that you can get a decent trade. But let's just say you did a 2-to-1 or something, okay, around there. There's your 1 loss, 1 win, let's say. And then price comes back up into the flip zone again here. I wouldn't generally take just blind entries out of the zone, although you will get a better risk to reward potentially, but you really want to look for more confirmation, okay? So here's another change in the state of delivery after the retest, and as you can see, price comes down, tags you back in a couple of times, and then drops down, okay? All right, so there's one flip zone then. Also wanted to draw your attention to when the flip zone gets revisited way over here, look what happens. We come back into the zone, we then do get some rejection and then some consolidation before price continues. So you can see that this is a strong zone. And why is this a strong zone? Well, firstly, because it's flipped a previously bullish zone, so it's broken through the previous bullish zone, and it's also broken through, causing a break of structure from a market structure perspective as well. So not only is it broken market structure, it's also broken this, or flipped this zone. Okay, does that make sense? Hope so. Let's move on to another example and see if we can refine it a little bit more. So there was a bullish example where it flipped to bearish. Here is a bearish example that flips to bullish. So let's take a look at this one. And this is where I did my CRT video and my trade. So if you want to check that out, you can. But you can see within this area, exactly the same confluences and stuff. We're just using slightly different lens to look at it through. This time we're using flip zones. So here we have an up to go down move, so a bearish zone, okay, a zone that has a lot of supply in it, we can say. So it had an expansion and a pullback and an expansion. So then we come back up and we retest the zone, okay? And we get a reaction. Remember, we need to have a reaction off of the zone. So we get a reaction, but then we fail to push lower as we would expect, because this should be a pullback, right? This was a pullback, an expansion. This should be a pullback, an expansion, if we're going to go down. So we failed to make a new low here. And then we start to get all this bullish structure, and we tap into it and we start to push higher. So we can anticipate now that we might be getting ready to flip this zone. So we come up, okay, and then we push back down. Now, the zone that created the breaker structure up here is this zone here. Okay, this would be our flip zone. We don't get revisited. Okay, we do get a breakout of the zone and a revisit here, but what we're waiting for, of course, it doesn't become a full flip zone until we've flipped this zone here. We've broken through this zone, okay? Because then it is our flip zone, right? It failed to make a new low, then it managed to break structure and flip the previous zone, and now price comes back down. We expect it might come back down into the flip zone, but in this case it doesn't. It only comes down into this previous zone, which has now been run through, and it takes fuel from there and goes up. But when you get a flip zone that hasn't been used, you can leave it on your chart, because look at this. Let me just zoom out. I don't even know how much do I have to zoom out to get there. There we go. So this flip zone, because it hasn't been retested, I've extended it out, and look what happens, right? You've got all of this price movement all the way up here, okay, all the way up there. We'll get to that in a minute. And then look, comes back down, taps this flip zone, and look at the move out of it. Okay, look at this move. So we can see that this is a strong zone. Okay, and if it hasn't been touched, when it does get touched, we can expect some kind of reaction from it. But let's continue up and look at the next example. So now we're in an uptrend, and we're coming up, and we suddenly get this zone here where it does try to push price lower. Look. So we've got this, bullish structure going up. We get like almost, it is just about, I don't know if you can see that, a breaker structure, because this candle closes, then this one opens below it. So it is technically a breaker structure there to the downside. But what we can see here is our bearish zone, our up to go down zone, managed to just about break structure, but we come back up and we test it, and then we come back down. But look, we fail now to make a new low, right? We should have had, if we're breaking structure and pulling back and breaking structure and pulling back, we should have had a new low, but we don't. Okay, so we come up instead, breaking through that bearish zone that caused this mini breaker structure there, and we break through it, and then again we retest, but we don't manage to get down to the zone. And look, when we break out of it, we do on the same candle come back into it and the next candle, but we don't get a proper retest, because to confirm this as a flip zone, we need to have broken through this zone first, right? So this is where it gets confirmed as a flip zone, but then we don't manage to come down, because look at all this bullish structure I've drawn on here, all these 5-minute fair value gaps that are supporting price upwards, all these 5-minute order blocks changing the state of deliveries, bullish ones forcing price up. We've got nothing bearish in here at all. No internal structure here saying we're bearish. So we really need some internal structure, let's say, to break this low here with these bearish candles, to think, okay, we've got then a change in state of delivery going downwards. We might come back and revisit this, but we don't get anything to say we're bearish. So we're not revisiting that one now. The price is too strong. Demand is too strong, and it's pushing price higher. Let's take a look on the left side, or the right side of the chart. Look what happens when the untapped zone gets retouched. We get a trade out of it, back up into where? Another flip zone that we're going to come to in a minute. Let's just continue and we'll get to that. So we're coming up, we get one last breaker structure up the top here, caused by this bullish zone, this last down move to go up. We then come back down, we tap into the zone, we manage to get back out of it, and this gives us our bearish zone, and it also comes out of this 5-minute fair value gap. So where we had basically all bullish action, and then we had this consolidation at the end here, then we start to get only bearish structure, bearish internal structure in the form of these fair value gaps and these changing state deliveries. So when we come down into the zone, we retest it, we push higher, but we can't make a new high, right? We're failing now. And then we break through, causing a break of structure and a break of this zone. Now we've confirmed our flip zone. Where do we go? Back up into the flip zone, into the change in the state delivery. You've got two of them right on top of each other here. And then we get pushed down to the downside. Now, what do we have here? Here's a bullish zone, right? A down to go up that never really got touched. Okay, we revisited it on the 5-minute candles, but nothing, it wasn't mitigated, it just tapped. So then we can expect price to come back down and reuse it again for deeper mitigation, which it does here. So then we push up and we push back up into this bearish structure here, okay, this bearish internal structure, and then we get pushed back down. And here is the last zone that goes up, look, up to go down. The last zone that goes up that breaks through this bullish zone, okay? Now what happens? We come back down, and as we said, in this case, we go back into this unused flip zone, which fuels price higher. So there's still a lot of demand left in here because people got left behind because the move went so fast. There's still a lot of demand in here, and price gets pushed back up into the other flip zone and into the 5-minute fair value gap, and great rejection out of it, and down we go. Now here we have an inverse fair value gap, and they kind of act as flip zones as well. If you think about that a little bit, I think you'll see it, because they are a form in a sense of flip zone, right? But they're more based on an imbalance rather than a whole pullback of price, as we're basing these zones on. And price goes down and continues. I think that's the last one I drew. But you can see again that revisit of that flip zone there from the left of the chart. So I mean, these zones are quite powerful, and you can see that I think all of them on this chart have not only broken through and flipped a previous zone, or destroyed a previous zone, let's say, they've also caused a break of structure. So if you have a flip zone that both breaks structure and breaks a previous zone, then you're basically saying that this demand level here, which was strong demand, has now been destroyed by the supply. So we've got demand flipping to supply and supply flipping to demand, and back and forth and back and forth. And you can see, you know, the red boxes on this chart are the areas of supply, and the green boxes are the areas of demand, and they're getting flipped each time. Okay, it's happening all over the place. I probably haven't drawn all of them on. I just picked out some nice examples. Here's one, you know, the first example. Okay, so flip zones are really powerful, really useful to add into all your other concepts that you've learned so far. You could be a flip zone trader, right? You could wait for this sort of structure to occur, and you could trade out of the flip zones, and that would be a powerful strategy, right? I mean, look at it. You see the proof right here on this 5-minute chart. Right? You could trade this model just on one chart without multi-time frame analysis. Now, I'm not saying you should, I'm just saying you could. I'm trying to open your mind to different ideas and different ways of doing things, and taking all the things we've learned so far, putting them into a framework and adding more and more concepts that you can pick and choose from. You know, you can make your own models out of this stuff. Anyway, an important thing to ask yourself if you are going to use flip zones is, what did it take? What did it break? In this case, price took the previous zone and flipped it and broke structure. What did it take and what did it break? Okay, if you ask yourself that, you can't really go wrong with these. And those are what make them strong zones. Okay, guys, well, I think that's it for the video. If you've liked this video, do the normal stuff, subscribe, like, all that stuff. Hope to see you in the next one. Take care. Thanks for watching.